All right, welcome to the Venture Vault. I am Michael Benatar, and today we are joined by Brian Esposito. The resume is huge. I'm just going to list a few of the top things that stood out to me on your resume here. You were recognized in 2021 as one of the top 100 people in real estate, as well in 2022 as one of the top innovators and entrepreneurs, and you are the current CEO of Diamond Lake Minerals. How you doing, Brian?
Doing well, Michael. How are you?
Good. So I feel like your resume kind of goes all over the place, but I'm interested in your current position at Diamond Lake Minerals. You are now, this is a crypto company, correct?
Yes and no. The word crypto and certain other terms like digital assets, NFTs, security tokens, there's a lot of confusion in the space. So DLMI is my life's work coming into fruition for 23 plus years as an entrepreneur.
Yeah.
And we are in the digital asset and security token space. So these are regulated assets, not the crypto or tokens that are floating around in the world, or meme coins that really have no real value or real anything behind them besides popularity and interest or a cool little graphic. So we play in the regulated space. I've done that my entire career. It's the culmination of, again, 23 plus years of my private holdings, which is Esposito Intellectual Enterprises. That consists of over 110 companies, over 200 joint ventures around the world, and proudly operating in over 25 different industries. So, now I get to operate in the public markets in this vehicle and bring my life's work, experiences, relationships, and know-how into providing value for our shareholders and our future security token holders.
So can you explain, because listen, I'm roughly like I've purchased some crypto. I've played around with the meme coins. I've done the NFT thing. But explain to me and maybe the audience as well, what is the regulated token? Because I felt like there was like a discussion maybe last year with the government, and everybody's trying to decide what it is. So what is the regulated version of this?
Yeah, I'll make it as simple as possible. So security tokens work in the same guidelines and regulations as traditional stocks or securities, public securities. So using that framework and applying it to a asset or a security that has a blockchain component. So it's on a digital ledger where it can buy, sell, or trade on regulated exchanges, much like you would do on a Charles Schwab or a Morgan Stanley account. But our partners and good friends and colleagues are a company called INX. So INX rolled out the first security token offerings in a regulated environment, working with the SEC. So those are our partners, and we utilize their experiences, their licenses, and their know-how to bring our DLMI subsidiaries, which I reference what I'm doing as an old-school GE model. Parent umbrella, multiple industry agnostic subsidiaries underneath it. Each of those companies that we acquire, start, build, or merge into will have a security token offering with. So what's really exciting and I think brilliant about the model is that a lot of people around the world, and the wealth of the world, don't trust crypto, NFTs, digital assets. They're intimidated by it, too many friction points. They don't want to go download a digital wallet like MetaMask. They don't want to put their personal information on an exchange or some platform that they don't trust, thanks to the likes of things like FTX and other ones. But they know how to buy a stock. That's something they're very familiar with. So we want to be that stock, that authority that puts that wealth of the world to put capital into digital assets through a system and a structure that they're familiar with, and that's going on their Charles Schwab account or calling their broker and buying a company that's in this space.
Yeah, it's changed so much over the last few years. I mean, obviously with FTX and even Binance, I think, and just the way crypto is headed. And obviously we just saw, I think the Bitcoin ETF was approved, right? So I think that's also now getting to the public market. So I think it's interesting how it changed so much. Like you could think back a few years ago where, the meme coins and even that movie that came out about, the, what's it called? I don't know. They were gambling on the GameStop stock. It's just crazy. And I think it's almost like all that needed to happen for the legitimate stuff to actually start being formed and rules around it. So I think it's good because a few years ago there was no rules. It's just like, oh yeah, here's my NFT. It's worth $100 million. So if you just want to have a little piece of it, that's great. But
the Wild West, and the NFT structure and that mechanism is very useful and very valuable.
Yeah,
you got to remember there was a global shutdown. People were stuck at home. They were craving to have some sort of sense of community with people. And you had a lot of entertainers and icons and management of those people that needed to find ways to make money.
Yeah.
So NFTs was the go-to. So that just went off without any guardrails, which unfortunately caused a giant reverse in those values.
Yep.
But it will find its place, and there's definitely a lot of value and opportunity with the NFT market, and
For sure.
it'll grow like a natural industry would.
So tell me, like, how did you get into all this? How did you start acquiring
Stupidity?
businesses? The what?
Stupidity, I would say.
But how did you start? Because, you know, I'm in, you know, the startup space. I have my own company. I have an agency. And it is fun as you start doing stuff. You're like, oh, okay, this agency now has enough money. Maybe I'll go buy a company that can live under this umbrella. And it's just kind of a snowball effect. But how did your snowball start? Where did you start all this?
Yeah, it started in the late 90s in the beauty industry. So I love technology, found myself working in the beauty industry. So I built the first B2B, B2C e-commerce platform for beauty. That was great timing, great mousetrap, launched over 1,200 brands. I became Amazon's first luxe beauty category for moving beauty products to their platform, Jet.com's first e-tailer, first to launch Google Wallet, even though that was a complete failure. But, a little Italian guy used to sell nail polish. I found myself working with a lot of incredible people and companies and technologies. So through that process, I see the world a lot different than most people. The whole see a need, fill a need, find the need model is just embedded in my brain. I see it all the time. So I go and build, and I bring things to market. Where it really kicked into high gear was in the beauty industry. I was helping brands and icons, celebrities, actresses, musicians, and everybody that you would think that would have a beauty brand associated with them, helping them create, launch, and distribute their products. And I was so happy just having the product. I didn't have the right formula of having equity in the brand that I was helping build and distribute. So when those brands had liquidity events or big beauty companies like Revlon, Estee Lauder, LVMH, L'Oreal would buy these brands for hundreds, if not billions of dollars, I had no upside in that. And then I lost the line because other companies have their own distribution channels. So I said, this has to stop. I remember one day one brand sold for a couple billion. I'm like, why? They were making that in their bathtub, and I was their first anything.
Yeah.
So then I said, I need to have a model where rather than people using me and bringing me into their world and taking advantage of me and me chasing them for crumbs, I had to flip the script on that and start. I want to own as much of the pie as possible. So we're building brands for the music industry. Let's launch a band. So then I went into the music industry, like an idiot would say, and lost a ton of money and got taken advantage. But I learned where all the bodies are buried in that space. And today I've got great relationships in that industry. Then I said, I'm not going to go and partner with an apparel company. I'll launch an apparel brand. So same thing, go through that same process of getting my ass kicked and figuring it all out. Then in the spirits industry, and then into building tech. I've always built technology. So I said, rather than licensing other people's tech, let me build what I need inside of our own mess. It really was a mess for a long time. It's like I had this master plan where, again, I want all these companies to work with each other, open up resources, share relationships, and a whole rising tide rises all boats type of mentality. And then also I was thinking, well, if one industry is lacking or one company's not doing well, all this diversification would allow for employees to pivot and work at other locations and find ways to just keep things always in motion and always fluid. You make plans and God laughs. I hit every hurdle you can think of, and then there's banking crises, real estate collapses, and all the crazy stuff we go through. But as I went to hell and back so many times, I'm so grateful that I just didn't have one thing. Because if I had one thing and the market didn't need that, I would have been really scrambling, trying to find ways to create value and create opportunities.
And when you were starting these companies, were you at the time reaching out, getting investors for it? Were you kind of scrounging the money you had and kind of starting the first business? Like,
always self-funded. Always
self-funded. Never took any investment?
No. Well, I mean, now recently with certain projects in the public company, it's a much different landscape. But
sure.
I should have taken other people's money. There's a whole strategy for that. But a lot of early on, I was very, very risk appetite, right? So I knew what I wanted to accomplish. I knew it may take a long time to recoup some values, if at all, because I was still figuring all this out. All that drama and uncertainties and stress and anxieties, I don't think I could have handled dealing with in my mind having other people's money involved in that. It was already enough aggravation alone. If I had people calling me all the time, whereas how are we doing our investment, I think I don't know if I would be here talking to you today. I don't know where I would be.
Yeah, it's a weird area, right? I think it's when you're starting, and when I started, I didn't take any capital for our company. We have a company called Dope Dog. We sell CBD dog treats.
I love that.
And we started when CBD was still still unregulated today, but I guess it was even more kind of like, what is CBD? Are you going to get high? Stuff like that. And it's just as I went into the venture world a little bit, I guess, and started like seeing, okay, what does it look like to raise capital? And it was stressful. And my wife at the time was also in the company, and she's like, I don't want to take money. I don't want to like have to answer to all these people. Cause if you're going to take like $1 million, that's a lot of money. And then all of a sudden they expect, everything from you. But we did find another way to raise capital. And we did it through kind of like not a crowdfunding, but basically we had a safe, and that's how we raised capital that way. And it felt a little more like friends and family round, I guess.
Yeah. Brilliant.
But it's sometimes so scary. And I guess I always try to tell people like, you should just do it. And I mean, look at you, you've done so many different businesses and didn't even take funding. If you were starting today, would you reconsider that, or how would you start a business today in this world? Because I feel like there's so many different avenues for it now, right? Like TikTok and all this other stuff. It's wild.
Yeah, the ability for anybody to be their own entrepreneur is amazing today with all the tools and resources. I mean, early on, I would have had to raise millions of dollars just to create the website I was creating for the beauty company. I had to teach myself how to code because I didn't have the capital for that. There wasn't the WordPress, Wix, and
Squarespace,
all these other
Shopify.
It wasn't this easy. Just drop a logo in and you're in business.
Yeah.
But I think that's so cool for today's entrepreneur, or somebody wants to get off their corporate routine, or they don't want to be a teacher anymore and they want to go and create something. I think it's amazing. I tell people, don't compare yourself to anybody. Don't look on LinkedIn or the Wall Street Journal and all these millions and billions of dollars that people are raising. They have the relationships, the access, and they're seasoned to be able to do that. You got to look at your world and feel accomplished about what you're doing. And I try to teach people, even the companies that I get invited into, like, get off this raising money, running out of money, raising money, running out of money, a hamster wheel that you're programmed and brainwashed to be on. Let's go out there and make money. Let's go out there. What is your product? What is your service? What is your solution? Start locally, get a few customers, prove out your model, prove out your margins, make sure you're priced correctly, and get in business. And if you do that correctly, then you're not foolish and going to 6-star hotels and resorts and restaurants, or flying around in private planes, or driving a Lamborghini with the proceeds. You can create a really nice business that maybe you don't need to raise money for.
Yeah.
And if you do need money, and with revenues coming in, it's so much easier to go out and get maybe even friendly debt or a bank loan or other forms of reasonable, friendly credit to help continue to fuel your business. Because the best place you want to be as an entrepreneur is owning your idea, your brain, and your heart, and your company. And when you go out in the market without spending the right money on a valuation, you're just making shit up. You're saying, oh, my company's worth this. I'm going to go $1 million valuation. I'm going to raise $100,000. I give away 10% of my business. Okay, maybe that was great then, but 5, 6, even a year down the road, if you didn't do that first step correctly, you can find yourself so screwed. There's only 100% of the pie to be able to dish away. And at some point, you may be diluted out of your own company, and you may be working for somebody else because you didn't take the proper steps in earning, creating a right valuation, and bringing in the right capital.
Yeah, it's crazy. And like, you just condensed down like a 5-year span of me learning all that, like the hard way. Like we gave a little bit of capital to advisors because we didn't have any capital to really give anybody. And I thought, oh, that's so interesting. Somebody's willing to help us out just for a little slice. And we didn't give a lot away. We gave like 1-2% away. But it was so interesting as you are in a startup and starting to build something, people get excited about it. And that's what's crazy. And also, I think a lot of times, like, I started an agency based off of like the needs I needed for my company.
Yeah.
And I was like, wow, this is, I feel like the agency model is a nice way of like, hey, you can have a really great lifestyle and a really great business and not need to raise capital and have great margins and just like have a business that, you know, makes what people make at on a W-2 job. And, and, you know, when you're doing a startup, you're like really scraping by and trying to like save here and like, okay, we got to buy inventory. We got to buy this. Like it's tough. And you know, exploring these different ventures, you really do learn, like, you know, make the money first, pay yourself for sure, and those margins. And it's just, yeah, it's just crazy. And I also, you know, I dabbled into a little real estate as well. And I really enjoy real estate. I think it's just a great asset to have because it seems like you can really leverage it in different ways and write off a lot of stuff. When did you get into the real estate game? Because I think that's a part I feel like all entrepreneurs just eventually end up in for some weird reason. Like I know a lot of people that started their own business and then just like, oh yeah, I just bought a few like rental properties and I'm doing this now. But when did you get into it?
It's a great asset for the balance sheet and all the reasons you mentioned as far as leveraging that asset, appreciating that asset. So I've always watched in my dad's career and what he built. I always had a nice real estate portfolio. But what I loved about watching him was that he was so never a couple of residentials, but I you know, two parts. I could never be in the residential real estate world. Boxable is a company I'm honored to work with and part of my holdings as far as equity. And they create fully manufactured modular homes. So
cool.
That solution for residential, I'm totally in.
Yeah.
But I could never kick somebody out of their home if they're not paying their rent. I just know I'm not that much of a prick. I couldn't do it. So therefore, don't get involved in that.
Yeah.
But in commercial real estate, watching my dad always nurturing the tenant, giving them the most friendliest rent. I'm like that, and you would see rents across the street so much more, but he never had turnover in his rental. They were always full. The people were with him some 10, 20, 30 years because he helped them grow their business and build their business and not just take. So watching that, I think it really embedded into my DNA, and I always want to help people. So watching that in the real estate world with my dad's portfolio, and then me getting involved with how do I take what I'm building and have real estate component sale leaseback model I'm obsessed with, where you own and operate the company that's also within the building. So now you're really bringing the value of that piece of real estate property up, especially if it's a AAA rated tenant that you have in there. Now you have something really valuable with a long-term lease. Yeah. So we're always applying real estate to all of our activities. With DLMI, one of my dear friends and advisors is Brandon Fugel. He's the chairman of Colliers in Utah, and he's the owner of Skinwalker's Ranch, if you've seen that show on the History Channel on Netflix. So we're going to be doing some really interesting things with Brandon's guidance, as well as what I'm doing with security tokens and starting to tokenize real world assets such as commercial real estate properties. And you'll start to see all these things unfold into all the work and effort that we're doing in our real estate division at DLMI. And the plan there is to have another angle to help offset another '08 collapse, because there's trillions of commercial paper out there that's going to be very detrimental to a global economy. And I believe having a security token offering where anybody around the world can buy into a piece of real estate rather than the traditional models that we have today, you give an opportunity for a lot of capital to help offset a big global collapse, which we need to try to avoid at all costs.
Yeah. So are you nervous at all with the fact that like I guess a lot of leases are up or they're about to like renew on their debt? Are you able to find deals right now in that commercial space? Are you nervous about getting into it? I've also seen New York, like I think aren't they converting some office buildings into just like apartments or even hotels?
Well, they're filling them all up with certain types of short-term tenants.
Yeah, I've seen that. Yeah.
I don't get nervous about anything, which is probably a problem of mine, because I learned a long time ago, the world's going to do what the world's going to do. I have to control my own little bubble and worry about what I can't control of. So unfortunately, history has shown humanity that other people's doom and gloom is other people's opportunities. So
Yeah.
there's always an opportunity. So when people are forced to liquidate their assets or forced to have a building go into foreclosure, it's a good opportunity for somebody else with capital. I don't like that mentality of taking advantage of other people's misfortunes, but that's the way of the world.
Yeah.
I can't change that. What makes me nervous about humanity is how forgetful we all are that there's always a collapse, and the market is at a height that is just ridiculous. And for people to think that will continue to go forever is unfortunate, because I don't know why people don't look back every decade. There is a giant problem.
Yeah.
We didn't see a giant problem during the pandemic because there was a lot of false
Fake money going around.
Yeah,
really, right?
That's the way to say it. There's a lot of capital being injected,
Yeah.
which pushed that 99 bubble, 2008 bubble. So that 19 situation we should have found ourselves in, I believe we're in it. And but as far as what we're doing, in my experience, it's always finding opportunities, not being over leveraged, and creating revenue, creating profitability. That's something that companies love working with me on, because I really boil it down to such granular business principles, which is why I'm in so many different industries. There's certain things that don't go out of style. If you want to be in business, you got to have revenues. If you want to stay in business, you got to be profitable. I don't care what business you're in. That's the model.
Yeah.
Not, we'll just keep raising money. That doesn't work.
Yeah.
I don't know. That's why we have giant problems, is because you have these unsustainable valuations and the wrong capital going into the wrong opportunities.
Yeah, it's interesting with the investment world, because you always hear, people are looking to invest money. It's almost like these firms have to invest the money into a company, and like, this company's raising and they look good. And you see the cycle of it. You see like, this company, didn't like, not Wayfair, but one of those like furniture companies, they went out of business and now they became Bed Bath & Beyond, which also went out of business, and they kind of like merged together. And you see it happen over and over again. And it is interesting. And there's a lot of companies that stick around for a long time, and they kind of go through the waves, and maybe they're not popular now, but maybe they'll be popular in 5 years. And it is just interesting. Like, I'm always thinking like, what's the next business I can start? Because I'm actually looking to try, and I'm in talks of maybe selling my company.
Congrats.
And I'm like, what do I do next? Like, what's the company? Because I was looking like to buy a company.
Yeah.
And I thought that was fun, because I've never done it before. And just, even talking to somebody, negotiating, looking at the books, it's just such a learning lesson. And I mean, this goes back even further. Like, I wish people taught me this in high school, or even, in middle school, and like, hey, this is like what a balance sheet is. Like, why was I 30 years old the first time I looked at a balance sheet of a company? And it's just crazy. And I this is also why I'm doing this podcast, because I always tell people like, you should just do it. And I know you might mess up, but that's the whole point. Like, you need to learn and figure it all out as you go. Cause like, I didn't know anything about manufacturing or packaging or anything.
Yeah.
And it shows, just like you, Brian. Like, you're out there, you're doing all this stuff, and it's crazy the difference, into real estate to, crypto. I mean, those are, big things, but eventually all those will merge into, like, crypto will be part of this industry and online and
it'll just
everything.
You won't even realize you're using it. That's how simple it's going to be. It'll just be built into your Apple Wallet or wherever your more routine is. But I'm glad we didn't get shown this stuff, and I think it's important for the world. Even when I work with entrepreneurs and startups, I need them to get their ass kicked. I need them to get some bruises. Otherwise, they're not going to be seasoned or know how to handle anything. It's nice that I'm there. It doesn't get too far, and it's a balancing act. Like you did that. You made a mistake. You feel a little violated. Now you know not to do that again. So for us, it was important to go through as much as we possibly could, make as many mistakes as we possibly could, learn from them, continue to evolve. There's certain leaders that I met that don't mesh well with me if they're big egos or braggadocious, or they never wrong or never apologize about anything. I can't work with those people because it just doesn't vibe with me. And they don't know how to be self-aware about how to grow. And every problem that happens, it's their fingers pointing at somebody else. Or every issue that happens, it's not their fault. They do everything correctly because that's how they feel that they are. And that's great. God bless you. But that doesn't work with me. I want humble, grounded, empathetic people around us, and the culture I've created is so warm and welcoming, and we turn down more business than we take because of not a non-alignment with certain companies or egos or leadership. So one of my biggest jobs is to protect the world that I've built and make sure we don't have anybody enter that creates a problem. But if that does happen, I'm also my mind, whether it's I completely just tricked my brain to think this way, but I had to, was I thank people for messing with me or doing me harm or stealing from me or screwing me some way, because they showed me a vulnerability that I have still that needs to be fixed. So, that's how I'm able to wake up in the morning and take on the day. Because if I ever become bitter or jaded or hate the world, then all of this was for nothing.
Yeah.
And what's the point in that?
Brian, I think we're going to end on that note. That was great. I mean, it's a lesson that we all need to learn. I mean, business is hard, and I think going through it and really learning, and you're so appreciative of just like where you're at and the people around you. And I think that's something big, because a lot of times I think, especially in startups, you don't see that a lot. You see a lot of big egos coming in like, this is the best thing, since sliced bread, and sometimes it's not. And the self-awareness is a big one. And I think that's definitely something for a lot of people to take. And I try to do it too, and try to see and, work on it and talk to people. And it's just, you learn as you go, and it's great. And I appreciate you coming on. Where can everybody kind of find you? Is there just like one site, or do you want everybody to go to diamondlakeminerals.com? Where do you want everybody to find you?
Yeah, my parent private holdings is EIE.rocks, so that's EIE.ROCKS. And then, as you mentioned, diamondlakeminerals.com is the public company, ticker is DLMI. And then for me personally, I get back to everybody. I love when people reach out to me, and I mainly use X, formerly Twitter, and LinkedIn, and it's Brian J. Esposito.
Great. All right. I appreciate you coming on. Thanks.
Thanks, Michael. I appreciate it.